Welcome to TradeTheMBI.com. This is John's Reporters for the 14th, and pretty much doing exactly like we talked about, just stabilizing right across. Still within this weak configuration with the DSC spread here, but the short-term buyers have pretty much kept this afloat during this what I call soft period. That's pretty much all it is. I mean, we've had this huge acceleration, and we're just kind of flat going across. This is exactly what we talked about. As this was beginning to develop as it related to the 90s and the same kind of up and pull kind of situation that just drove people nuts because they all kept thinking the sky was falling and the end was here. And it might very well be, but you can see this extreme histogram lets us know that there really isn't a whole lot of dumping out of the situation. It's just a matter of, I would say, just a tiny little backfill, which hasn't been all that significant. Much stronger from a shakeout from the NQ, and you can see that was the divergence that we had between the two. The S&P, the ES that we saw there had completely gone to a negative shakeout, completely resetting, so no overbought at all within the ES configuration. And now this is, I think the previous reading was 720, and now we're going to be moving up potentially. That will have an impact, because a rising shakeout is exactly what you look for. And it's not amazing that the support happened just as the market looked like it was going to break down. You got a euro rise, which has supported the market. Convenient. Power of central banks, you got to love it. And TMT not going to go anywhere though from that short signal. Is pretty clean though. Some short-term buyers elevated. But here's the difference. See the extreme? That drop off into the negative below the red line certainly creates much more weakness. I wouldn't expect that it will turn around here real quickly can do much to abate that decline. And oil holding up at the highest levels. Some people say it's because of the concerns in Saudi Arabia. No, it's just a little bit of a constriction right now in overall supply, and the increase in demand is starting to show itself, which is exactly what we were all looking for. And gold, I'll bring into no man's land at this particular point. I mean, there's really no impetus at this particular setup, but I think as soon as you either see a boost in inflation, or even as the rate hikes start to go, that would be an indication that that's going to start driving it, and I think that you would see a significant spike at that point. Again, we talked about pretty straightforward with this level right up here above the 123 is what has to happen before anything is going to get serious with gold. 5K chart was interesting because as we got to the peak right about here, we started to get a short signal at the end of the day yesterday, and then spiked up just fractionally, which created this really deep inverse move. As well as you had the cyan below red, and then immediately the steel just crossed below and broke down under it once it got below the ABM there, and then you ended up with the DOC spread, but you didn't quite get the full spike up to the 13.5 as you broke the 50% line, and that made it to lows. We could kind of see that that was taking place. We had the dip below the red line that took place, so the pop that took place we knew was at least going to retrace back to that 50%, and then it just cascaded with a beautiful reset right there, which was much cleaner than the short side of that signal, and took it all the way right back to the peak. And all we've done is done a 50% retrace from that. So from the low to the high, 50% retrace, go, same thing, went to the high and then back to those ranges. So I think that we're just getting a constant continuation. So from that standpoint, all good. I'll continue to post any relevant charts as needed though. As always, trade well. We'll talk again later.